Welcome back into the program right here on the radio. Of course, Blake Templeton, Director of Operations with LubbockInvest.com. Real estate investing done for you. That's what we do at LubbockInvest.com. Let me say good morning to Blake Templeton. Good morning, sir. How are you?
Doing good, Mr. Wade. How are you?
I'm doing well, man. Doing good. You know, we've been talking about the markets for the last hour and a half, and we even mentioned real estate being part of your overall portfolio, and it's a good idea to do those kinds of things. And especially in light of what's happening with the markets now. And so when I met you for the first time a few months back, I thought, man, this is a good idea you got going on here. And so we wanted to highlight that on the show about what people can do at the local level. I mean, we've talked about REITs before, and we talk about how REITs work and all that kind of stuff. But basically, you know, what we're looking at here is a situation where you've gone out and said, well, let's look at rental properties. Let's look at places that we can develop, things that we can do to, you know, invest your money so you get a reasonable rate of return on your money at the local level and do things all over, you know, West Texas.
Yeah, absolutely.
Which I've been doing. And so you might want to tell, since this is your first show, you might give us a little background on you, how you got started in this, you know, what kind of opened you up to it. I know that, you know, with investments and things like that, people, you know, since 2007, 8, especially 9, when people started scrambling around going, well, what do I do with all my paper stuff? You know, I mean, I've got all, you know, stocks and I've got bonds and I got paper and, you know, and I'm invested in that. And then the gold and silver made a huge jump. And then people started saying, well, that's fine, but what about real estate? Okay, well, let's look at real estate. But I think people are really looking at hard assets of places to go to say, you know, look, I want to put some of my money in some type of hard asset that, you know, that I can see a reasonable rate of return in down markets, you know, where it's very volatile. And it is volatile. I mean, we see that. And so take it away. Give us some background on you and where we want to go from there.
Yeah, absolutely. Well, I started 6 years ago in real estate, and I started with just build my own portfolio. I started with just aggressively in sub-markets where there are secure markets that stay secure during a downturn and an upturn. And what I ended up doing, though, what started happening was people started saying, hey, can you help me do the exact same thing? Can you help me do the exact same thing? So over the last 6 years, we've done 271 transactions, and we just slowly migrated to where we were able to start serving people and basically doing everything for them where they truly could rest while they invest and make a substantial rate of return. You know, you made a good point in what you said, how people have, over the course of history, have just kind of gone from whatever the next hype thing is, thinking that that's going to be their saving grace financially. And the problem with that is it's not taking them to, I mean, as we look back past over the last 15, 20 years, whatever we've typically done has not taken us to where we want to be. And the largest problem is because we're not making enough in regards to how the rise of inflation is. Mm-hmm. And so right now, if you're, you know, as we talked about last time, we talked about the consumer price index. What the government's telling you that the inflation rate is 3.1%. Which would mean you'd need to be making at least that much money on your investments to break even.
Right.
But in all reality, they've kind of skewed some numbers and put real estate in that mix. When you pull real estate out, because it's a beast in its own, if you actually look at the raw goods like gas, you know, groceries, you know, bread.
Consumer stuff.
The consumer stuff is what you're actually purchasing.
Right.
And that's what you want to know. What's the price of that inflation? Well, that's 8.1% right now. In today's market, you need to be making 8.1% on your money to break even. And so if you're not doing that, it doesn't matter. I mean, the drama of everything else, after it all settles down, if you're not making 8.1% on your money, you're losing money.
Well, you know, there is that hidden, because even like when the Congressional Budget Office, or like you said, the Consumer Price Index, some of these organizations out there that go score this, the Fed themselves, when they do this type of stuff, there's a lot of hidden stuff in there that people say, well, wait a minute, you know, gas prices have jumped way more than 3.1% in the last year. Now, great that they're coming back down and we've dropped from 102, 103 a barrel back down to 82 or something a barrel. But that's inflationary, even at 82 compared to where we were 3 years ago when gasoline was less than $2 a gallon. I mean, we're still around 3. So you have to take in all those, and then of course that filters throughout the economy, because then I see every little service company out there now doing this. And I'm not saying it's necessarily bad. It's kind of aggravating, but when the first huge run-up on oil happened and we almost went to $5 a gallon, then the service industry, whether they're a carpet cleaning place or whatever, the first thing you saw on your bill was, well, we're doing a fuel surcharge.
Sure.
Remember that?
Yeah.
Fuel surcharges everywhere. And then so we thought, well, no, we understand. You're a service. I like to order pizza.
Sure.
I ordered from a company about a month ago. I won't give their name. Some do, some don't. But this particular, delivery, they put a $6 delivery charge on there.
Yeah.
Well, what's that all about? Well, does that go to the driver, or is that part of the gas? I mean, what's going on? So a lot of companies are starting to do this, but then yet if prices go down, they just leave it on.
Absolutely.
And so you're absolutely correct when you say there's a lot of hidden inflation into these numbers when the Fed comes out and goes, oh, no, inflation's low. And some even argue we're even in deflation. But at the end of the day, I'm not feeling it in the wallet. When I go to the grocery store, it's expensive. When I go to the gas station, it's expensive. Yeah. And so it's inflationary.
Well, and with that said, you make a fantastic point. With that said, when we're talking about real estate as an investment, most people have a huge mistake. And a lot of your money managers, great people, but just ignorant. They make a big mistake when they're speaking about real estate. We're not looking at capital gains investment. That's kind of icing on the cake. We're not looking at selling real estate. We're looking at holding real estate as a passive income producing giant. And what this does for people is they're actually pulling that cash flow out instantly every single month, and they're able to utilize that at that very moment, at the power of the dollar at that very time. When we're talking about capital gains in any other investment, we're looking at the long term of not pulling out our money until many years later. We're treating that more like a savings account, while the actual market itself, the power of the dollar, is decreasing and inflation is rising. And so the power of real estate right now is two things. It's a physical commodity where it's tangible, so it doesn't matter what the value of the property does. Although properties are appreciating, and with the understanding of inflation, when the price of bread goes up, well, the price of real estate goes up typically. I mean, everything, supply and demand, takes its toll. But what we're really looking at here is a huge benefit of monthly cash flow every single month.
But we were fortunate, Blake, though. Let me jump in here and challenge you a little bit. We were fortunate in the fact that you started up your company here in Lubbock,
right?
All right? But Lubbock and the West Texas region, as a whole, did very well. Stable. We were stable. We weren't wild of Las Vegas or Atlanta or Chicago, right, or some of these real estate areas that just absolutely California, right, that went in the tank.
Right.
And then people blew up their home, and it was like literally gone,
right,
where they were buying, and it was no big deal to go out and buy a home and pay, $300 a square foot in California.
Right.
And then they wake up the next day and they go, you know what? That's really only worth about $100.
Right.
I mean, people were getting blown up left and right, as you know, when the housing bubble burst. And then all that speculation about, then commercial property is next. And I guess you could lump apartments and those kinds of things into the commercial aspect. But that was supposed to be nationwide, but that really didn't really happen like it did in the residential side. Residential side nationwide did blow up, but commercial real estate, even nationwide, stayed relatively stable. There was some pockets of some bad things, like in Miami and other places, but for the most part, it stayed fairly stable compared to residential, correct?
Yeah, absolutely. And so that's really the power of real estate investing, and a turnkey company like Lubbock Invest is